Hello there, you're watching The Week Ahead. Today I'm joined on the line by Naeem Aslam from Ava Trade. Naeem, Asian shares fell today due to concerns over growth. Now, do you think we will see more negative results from China this week, especially with Tuesday's manufacturing data?
The Chinese central bank has recently pumped nearly 80 billion into the market, and they've done that very discreetly. It's not like the other central banks where they provide forward guidance where we are going. So the Chinese central bank in that respect is very, very discreet when they are doing any kind of quantitative easing. And as long as the bank is committed to keep the growth up in the country, so we think that there's an upside in the Chinese market for surely. But at the same time, one thing is certain, that they are not going to achieve the growth target of 7% or anything above that. So probably we are looking at nearly about 6.8% in China. But again, I'm not going to write that off any kind of a data, because as long as the central bank is committed, like I said before, Chinese markets and the Asian markets have a lot more room towards the upside.
Now, Naeem, this week will also bring a fresh look at the US housing sector, with reports on both new and existing home sales, as well as Thursday's data on durable goods orders and initial jobless claims. We saw the dollar pull back today from the highs we witnessed last week. So, Naeem, how strong do you expect it to be by the end of the week?
We're still expecting the dollar to go stronger, but we could have a bit of a sideways movement given the massive moves that we had last week. Basically, the entire move was that, okay, the Fed are going to be more hawkish in their statement. But what they have done is they have tempered that expectation with saying that, okay, we are going to raise the interest rate later next year, but the pace of that interest rate is going to be very strong. So that, it inflated the dollar, and now we are going to see a bit of a sideways move for dollar going forward this week. But we do have a few Fed members speaking this week, and it'd be interesting to have their view where they see the interest rate moving. Are they going to give us the same kind of a message that we had from Janet Yellen, that the pace of the interest rate is going to be more steeper, or is it going to be a bit more gradual move?
And finally, Naeem, this week traders will be closely watching Tuesday's data on Eurozone private sector activity. Now, what sort of week do you think it will be for the Eurozone?
What traders are really looking for, they wanted to have a full-blown quantitative easing from ECB President Mario Draghi. He is not going to certainly do that this year. This is our view, because they have already initiated two different kind of quantitative easing. You can certainly call them quantitative easing, which are ABS and TLTROs, and they're bringing nearly €1 trillion into the market. So they definitely wanted to have some sort of impact. They wanted to see how that's going to work and how that has impacted the different economies which are, going towards a downside within the Eurozone. But they're not going to just initiate the full quantitative easing by just that the market is expecting. But one thing is for sure, that the governments within the Eurozone, they do need to have some sort of a reform. And if we take an example of Ireland, that is one of the most strongest economy within the Eurozone, with positive GDP growth for the second quarter, and then that was a similar situation for the first quarter. The country has been recovering at the strongest pace. The activity level has risen 1.5% for this quarter and 2.8% for the last quarter. And if you compare Ireland's economy's peak from, if you compare it to its peak, it is only 3.5% away. But if you compare that with Spain, Portugal, Italy, Greece, they are ranging from 7 to 24%. So what we really need, what I'm trying to say, is that we need a structural reform within these governments rather than having a more quantitative easing, because they have done enough by bringing $1 trillion for the time being.
Naeem, thank you for your time today. We really appreciate it. Well, viewers, do stay tuned. Do not go anywhere, as we have plenty more interviews just like this heading your way. See you very soon.